Hello, folks. Welcome to the Weekend Investing Daily Bite of 15th of May. And the market actually being very volatile today. Three or four sessions of ups and downs on the Nifty, and then finally it just went ballistically up, closing above 25,000. And this has surprised a lot of folks. The rest of the market was not as bullish as Nifty, but nevertheless on the green side. And the general perception in the last few days has been that the market does not have the strength to go up, but the market is defying all that logic, and you need to basically stay with the strength of the market and just follow the market. Today in the video second half, we will have a discussion on a behavioral issue with most investors, which costs them a lot of damage. We will discuss that with case studies, and that is going to be in the second half of the video. Do read the disclaimer and subscribe to the channel. So in the markets, let's look at the Nifty chart. You can see here the intraday, of course, is not visible to you, but there were wild fluctuations of 3 or 4 times, and then finally market taking off, closing at 1.6% above 25062 is the closing. I think market is now down less than 5% or 6% from the all-time high. So this is very rapid sort of you know wind back of the fall. The rest of the market is not yet there. So a lot of small cap, mid cap stocks are still 30, 40, 50% down. But Nifty, in its own wisdom, is nearing its all-time high again. Nifty Junior also up 1%, 1.05%, challenging this April high. So the chart patterns look quite robust, and there's no reason to disbelieve the rally. Mid caps flying 0.69%. This is also less than 20% down from all-time highs now. Small caps also up 0.75%. So it is like a rally of disbelief. Just like they say that markets climbs walls of worry. This is exactly what is happening, that nobody wants to believe the rally, yet the rally goes on. Bank Nifty also up 1%, and that is a good sign. Bank Nifty is creating this flag like formation, as I was mentioning earlier also, and it is just about to break out, and that may be the reason why we may see more upsides going forward. Gold has tanked but stabilized today. So gold had hit nearly 91,000, and as I speak, it is closer to 92,500 on 10 grams. So gold is seeking some uh, bottom. It has tried to break below this support, uh, but is at that exact level right now. Let's see by the end of the day where it reaches. Reasonable pullback to the means. Advanced decline trends, you can see here 375 to 124, very much in favor of advances. And you can see that during the day, the advances continuously went up and declines continuously went down. So the strength of the market, in fact, improved during the day towards the end. If you see the heat maps, there is no red on the screen here. Reliance very handsomely up 2%. HDFC Bank, ICICI Bank, Maruti, Tata Motors, a lot of stocks are doing very well. JSW Steel coming back up very nicely. Uh, you have Ultra Semco, even ITC pitching in about 0.8%. Bharti Airtel after its results for 1.8%. So overall, a very good day for large cap space. In the Nifty Next 50 also, you can see some big gains coming in through for DLF, Bajaj Holding, Lodha, LIC, JSW Energy, HAL, Indigo, Naukri, Shriram Cement, Jindal Steel, all in the second half. Basically, till the first half, this was all gray, and now it is suddenly a lot of green. In the sectoral trends, let's look at top gainers. Again, defense stocks 2.6%. So defense is just going up like a missile. Auto 1.9%, real estate 1.9%, metals 1.7%, infrastructure, commodities, media, consumption stocks all doing 1.5% or more. No sector was in the red today. Even IT stocks up 1.2%. PSU banks and capital market a bit slow, resting at 0.2% for the day. You can see here defense stocks like Astra Microwave, Kochi Shipyard, Zentech, Mazagon and Data Patterns doing 3 to 9% for the day. In the last 5 sessions, defense has just gone ballistic here. Defense index is at an all-time high now. The auto stocks also picking up. Autos up 6% on Hero Moto, Tata Motors 4%, Bajaj Auto 2.8%, Maruti and TVS Motors also pitching in. So there is likelihood of better terms for the trade deals, and that is renewing the enthusiasm in auto stocks. So let's now talk about the costliest mistake some folks may make. It's going to be a lesson in a behavioral bias. So Paytm shares slide as Ant Financial offloads 4% stake via block deal. This was reported. Um, Paytm, as we know, is very much off its IPO price, has languished as low as nearly 300 rupees, went to 1100 and now is here. Uh, a big chunk of stock is likely getting sold uh, through a block deal. And the story so far is that Ant Financial stake in Paytm drops from 9.8% to 6%. Uh, Paytm reports a loss, companies amidst financial and operating challenges, and Paytm stock remains volatile due to regulatory issues. That has been the story around so far. So, a lot of investors who invested in the Paytm ITO may be struggling with this stock, what to do with it, whether to exit the stock. There have been several multiple negative news. Earlier, Warren Buffett had exited the stock, uh, and essentially at each stage of a fall, the investors remain confused whether to hold it, whether to finally exit it, whether to sustain these years, and hopefully something will come out of it. Now, all those investors are basically dealing with two biases: the anchoring bias and the confirmation bias. So, what is anchoring bias? Anchoring bias is basically being anchored to your impression of the company. So, if I am anchored that yes, Paytm is a great company, and that uh, I'm anchored to a particular price, or I'm anchored to the fact that I have full belief that this company can make it. And then the other one is the confirmation bias, where we are seeking information that confirms our thoughts, rightly or wrongly. So these two biases essentially can cloud our decision making ability. And Paytm is just an example. I don't want to malign any stock for no reason. So let's discuss confirmation bias first. So confirmation bias, as I mentioned, is it's a tendency to process information by looking for or interpreting information that is consistent with their existing belief. So if I believe that Paytm is a great company, is a good investment, then I will seek information from others, or I will seek that information which will confirm this. There may be some information which will not confirm this, but I will not seek it then, right? So if, or I will not allow it to be absorbed by my mind. I will only seek those things which confirm my belief. So let's say, take an example. A investor is Rohit. He's a tech savvy salaried professional in Bangalore. He has been using Paytm for years, for his recharges, for his payments, for his movie tickets, everything. For him, Paytm is not just an app, it is the future of Indian fintech. That's his beliefs. Now, when Rohit sees Paytm everywhere, whether at a Kirana store, whether in the cab, whether it is an IPL app, he basically is getting that confirmation that yes, Paytm is everywhere. Analysts on business channels may be calling it Alibaba of India. That is confirmation that yes, I am in the right investment. Warren Buffett has invested in this stock. Yes, he must be. He's the greatest investor of all time. So I must be right. And let's say he applies for the IPO and he gets full allotment. Now, you all know what happened to Paytm stock post IPO, and post IPO, uh, it lists at 27% loss. Then Macquarie comes around and says slashes price target by 48%. Then SoftBank comes down and trims its stake. Now we are at 60% loss. Then Warren Buffett sells out and exits Paytm. Now you're at 80% loss. Um, then there is some scrutiny by RBI, which causes more stress here. But then there is a rally here, and post that rally, uh, RBI cracks down further, and Vijay Shekhar Sharma steps down from the bank's board, and then you have a all-time low of 300 rupees just about here. uh, Again, more operating losses, but then there is a come back, and we currently at around 800 rupees. So this journey, in this entire phase, uh, Rohit basically joined IPO WhatsApp groups where everyone was bullish about this, and he followed those handles which were bullish about Paytm, and he says buy the dip every 10% fall. And news like LIC has picked up stake has become proof for him, confirmation again that he was right. So that's how you're getting confirmed at each point. Although in the graphic that I showed you, there were so many news that were negative, but this person who is seeking confirmation will not pay heed to those news. So what has confirmation bias cost him? His capital has been locked in for 2 years in a stock that has not performed, constant stress, constant checking stock prices, and learning the hard way that great product is does not mean a great stock. So if you really like the app, that is great, but that did not translate into a great stock performance. Now, if we were to look at from a momentum or a non-discretionary investing point of view, how we would have dealt with confirmation bias. So basically, the first line of defense is that IPOs are ignored. So the stock must prove its worth in the market for at least 6 months, create a price history, and only then, the models will start to look at those stocks. It will also replace belief-based decisions with price-based rules. So doesn't matter who thinks what about any stock, or what is the news. It is the price and what the market is doing on that stock that will determine the outcome. So for instance, from a momentum perspective, in phase one, there was no buy signal at all. Then in phase two, there was a buy signal, but it exited within a month with a small loss, 5, 7, 8% kind of loss. And then there was a down period again where there was no entry point. And then later, much later, a phase where the trend was established, and then maybe a later entry here, and still holding on to that entry. Perhaps the trade is running with no great uh, gain. But the biggest thing is that you avoided this entire pain of first having to see a IPO drop, and then to see have gone through this entire journey of pain, and all this while your capital would have been free to be used at other places. So I don't know if we'll make money on this stock or not, but capital is not getting locked in stocks that are lagging or underperforming for too long. So what do we need to learn out of this is that momentum cuts underperformers early, ensuring that capital is not stuck even if gains are not maximized. Time should not be wasted. There is time value of money, and that time value should not get wasted. There is no anchoring, so it does not hold on to past winners hoping for a comeback. So there is no hope. Exits are based on current trends and not on past glory. So even if some stock has done really well, but right now it is not doing well, these strategies will not hold on to that. Only when it starts to perform again, the proof will be there in terms of price. Will these strategies pick up those stocks again? And again, no confirmation bias. There's no room for biased justification. There is no element of human intervention or human thought process that I think this should do well and hence I should buy it. That does not go here, because everything is rule based and there is no belief or selective use. So from your own experiences, how many times have you been exposed to a confirmation bias? Have you been a victim to confirmation bias? Do let us know in the comments, and whether these kind of case studies ring any bell for you. Do give that feedback. Thank you so much for watching. Do like and share these videos, and do subscribe to the channel. Thanks. Bye.